Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Today I'm going to go over real estate. We're going over the October 2021 monthly housing market trends report from realtor.com. What this is telling us is it's telling us days on the market, what homes are selling for, what the active listing count is for inventory. This is basically the data that I use for the real estate market. This is the overall market. And if this remains strong, I don't think we're going to see a crash in the overall, like a blowout crash that impacts everything. It doesn't mean that stocks can't necessarily work their way lower. This is what drives the blowout crashes, the ones that have a deleveraging event, like a liquidity crisis. If this remains strong, I just don't think it's going to happen. I could be wrong, but usually what happens is you get this alignment. You get a bunch of inventory. It'll increase your inventory levels of real estate. Your days on the market go really long. You get over 6 months of inventory. So you get more like 10 months or something like that. And then your housing starts start to decline. Your housing starts means that your credit is starting to contract. And if you go below the average, you have less and less money getting loaned into the system, which is deflationary. It's a deleveraging event. And that's when you have to worry. So let's look at the data. Let's see what it says. And obviously, I'll give my financial opinion as I walk through this. So this is October. I'm going to go right to the charts because that's what I like looking at. I don't like reading a bunch of verbiage. So this is the active listing count. It's down 22% in October of 2021. Over the years, this active listing count has tightened and tightened and tightened. 2020 and then 2021's this bottom line here. It's signaling that inventory has never been tighter. So everyone who says that the real estate market is going to crash, I don't see how. I really don't know how it's going to do that. And these guys that are talking about a market top in real estate on their channels and whatnot, if your active listing count continues to decline and it's down 22% over the year before, how are prices going to decline? Now, the rate of change, now I've seen home prices where the asking prices came down a little bit, but they're asking way higher than the year before. They may be asking $100,000 more than the year before, and then they drop it $20,000 or $10,000 off of the asking, which might have been too aggressive for, which I consider to be seasonal. If this is seasonal, we're going into the seasonal. The best time to buy a house is in December. That is seasonally when it's the weakest and interest rates are the lowest historically. So December is the bottom of the market. And you'll see that in January numbers. So it's delayed a month because the closings close, and that's when the data hits. So December is the best time to buy a house because of seasonality. Just an FYI. Moving on down, newly listed homes. So in October, newly listed homes declined by 2.3% year over year. These are new listing counts, and they are still very low. Yes, the new listing counts are higher than 2020, but they are still very low. You can have increased listing counts and have your active listings go down, which means that the homes are moving faster, and there's far more buyers than people who are listing their homes, which is the case. It has to be the case. Going down, homes continue to sell 8 days faster than last year. So it's down 9 days compared to last year in October, at least that's what they have. There's 2021. This is the rest of the crew. 2020, it really started to heat up and come on down late in 2020, and we've just continued the pace lower and lower and lower. Now, this is incredibly fast to have the entire market be moving, in less than 40 days, in less than 45 days. I think where I live, it's 5 days. It's a house comes on the market and it's gone. We don't even see homes on half these websites because they're already sold. And I'm not buying a house. I'm just saying in general, that's what people who are trying to buy, you literally have to sit at your computer clicking refresh, hoping that you even know that something's going to come on the market before it even hits the market. through word of mouth or something. But this is moving faster, which means we have less inventory and the inventory is moving faster. Now, what about median listing price? The median listing price is up 8.6% year over year in October of 2021. It is continuing to go up. Now, that it's continuing to go up. So these guys that think this is the top of the market, that's just seasonality. You can see that all these other years, they basically goes flat to down a little bit through the seasonality. It's probably just going to continue higher. That's my guess over time, given the inventory and the days on the market. Price reduced share, 0.8 percentage points. It's kind of flat. It's still great. It's still better than all these other years. And everything is looking very, very strong. Of the ones, Austin was up 32.5%, Vegas 27%, Tampa 22%. And then the median list price October, while Milwaukee was up 6%, Hartford 5%, and Austin 5%. So the greatest increase in their share of price reductions compared to last year. So that's price reductions. That doesn't mean that the price didn't end up. So that's our market data. That's real estate, and it comes out once a month, and it's slow to move. Everything looks good. Everything is going up. Inventories are going down. Days in the market days in the market going down by 8 days, 9 days faster. So everything looks good to go. There's nothing here to worry about in terms of real estate. And you know what? I'm not going to worry about it. If you guys like this content, give me a thumbs up. Subscribe to the channel if you haven't already. And thank you for listening. This is Finding Value.